guys, welcome back to my channel. Call me Nivek, starting with K. आज हम बात करने वाले हैं कैनेडियन प्रॉपर्टी मार्केट के बारे में. बोले तो रियल एस्टेट, हाउसिंग, बट हम स्पेशली बात करेंगे फोकसिंग ऑन टोरंटो. But before we start our video, let's talk about some breaking news in the market.
Here's something you don't hear often. Canada's housing market has been pretty balanced lately.
With the 5th June 2024, the rate cut, the first since the Bank of Canada held rates steady at 5.0%. Today, we have got some exclusive insight into the ever-shifting landscape of the Canadian property market, specifically in Toronto, focusing on what's expected to unfold by the end of 2024. You must be wondering why we are focusing so much on Toronto. Because people nowadays say it's becoming beyond affordability for newcomers in Canada. जैसे जैसे टोरंटो की prices बढ़ रही हैं, newcomers are finding it tough to afford homes here and are moving to other provinces.
39% for people who have lived here less than a decade are considering relocating from their current province because of housing costs.
So, if you are eyeing Toronto, this might be your chance. Remember, Toronto real estate is like an avocado. Expensive today, even more expensive tomorrow. So buckle up. Let's talk about the waves of transformation that have already hit. By the end of 2024, property prices are expected to experience a shift. Not a seismic drop, but enough to make an impact. Because many savvy buyers clinched home at lower price and rock bottom interest rate some years back. And fast forward to today, the winds of change are blowing. Interest rates are on the downswing. But remember, the condition of the interest rate the last year, it was, but now it's downswing. However, the tide has turned. Increased interest rate prompting some property owners to contemplate selling because they're uncertain about qualifying under the current rates on their renewal. And as per the source from CTV News, the researcher says nearly all remaining mortgage holders in this group will renew by the end of the year, likely meaning higher payment for them as well. Forecasts suggest economic growth will be weak in 2024 before picking up again toward the end of the year. It's not all sunshine and rainbow. It's a like twist hai. We have got some inventory concern to address, which is contradicting the price hike.
Royal LePage's data shows that in Canada's two largest and most expensive markets, Vancouver and Toronto, home prices are up slightly year over year in the second quarter, while the number of listings are up too, providing a good stock of inventory.
Absolutely. There are certain factors at play, but they may not significantly affect the majority of individuals who are just simply in the market to purchase a home without the need of extravagance or specific set of requirements, like trying to find an affordable Dabeli in downtown Toronto. Almost impossible, but worth the search.
The study also found Alberta is the most popular domestic spot to relocate to at 18%, while 27% would just leave the country.
In this video, we are not just going to discuss how the situation is expected to unfold by the end of 2024, but also how this information can help you plan for your dream house. Speaking of dream, if my calculations are correct, Toronto's prices might just give us all nightmares. चलो थोड़ा flashback में चलते हैं. Just a year ago, finding a property in Toronto for less than 1 million or even 900K was a rare feat. When I'm saying that, means Toronto and the nearby, and not the outer areas of Toronto like the Orangeville or Bonneville. No. And rewind to 2021, and you would be hard pressed to find any house under 1.2 million. Sure, there were condos and apartments in the surf for 700K range with 1 or 2 bedroom, or maybe a den just available with that. But now the market has undergone a fascinating transformation since then. Today, you have got more modern apartment within that affordable range, and houses are cropping up for less than $1 million. As seen in the table, the average price for houses in Toronto, Ontario has gone to $890K. And when I'm saying that, that means it is a buyer's market. Due to the current buyer's market, you'll see more of inventory in the markets as the sellers are trying to sell it off for more. So, in this situation, when I say the buyer's market, we also took the advantage of buyer's market and bought our first ever home within 2 years of being in Canada. And if you would like to know more, please comment below, and I would love to post a separate video of our journey from start to end of buying our home. Let's get moving. As I mentioned before about the buyer's market, this is what as per National Residential Status. The actual, not seasonally adjusted numbers of transactions came in 3.7% above December 2022, the largest year-over-year gain since August. On an annual basis, home sales totaled approx 443K unit in 2023, a decline of 11.1% from 2022. So you can imagine what's going on right now in 2024. Now that we have explored the current inventory scene, let's shift gears and talk about something equally important: budget planning. Because knowing what's out is one thing, but making it work for your wallet? Arey bhai, budgeting planning is like planning a big Indian wedding. You need to count everything. Because it's not about only property prices. You would need to establish a realistic budget that includes purchase price, considering additional costs such as closing costs, property taxes, homeowner insurance, and maintenance expenses, and etc. etc. It's about creating a budget that is not only gets you through the front door, but also ensure you can comfortably stay. But wait, there's another critical player in this financial orchestra. There will be like so many of them. Yes, the credit score. When we're talking about the finances and budgeting, the credit score plays a very critical role. Maintaining a good credit score is just not a suggestion, okay? I'm not just suggesting, but it is a cornerstone of any financial health. Whether you're a credit rookie or a seasoned pro, your credit score is the silent conductor influencing every note of your financial journey. So check out my video on essential tips for newcomers to Canada, what to cover and what to do in your first week, which I have covered in this video. If you haven't seen that, click on the link to watch. So now, as you embark on your journey towards property ownership, remember, it's not only about the property prices. It's about crafting a realistic budget and nurturing a healthy credit score. Because अच्छे credit score के बिना your home buying dream might just turn into a nightmare. Or maybe other things too, buying a car or anything. The credit score plays a very critical role. It's like trying to make chai without tea leaves. Impossible and disappointing. So maintain a good credit score. Now, as we get into the financial planning, it's important to talk about the big concern, the rise of interest rate. But now, with the drop and cutting of the rates that we are seeing in 2024, this change affect how we plan our finances and buy homes.
Today, we lowered our policy rate by a further 25 basis points to 4.5%.
It's like trying to budget for your next biryani feast and suddenly realizing the price of rice has just doubled. Totally messed up plan, right? But with these cuts and the news we're hearing that we might see a little bit of rate cut, but still, it's a worry that can keep any prospective buyers up at night. Because still the prices are not, the rates, the interest rates are not that low. But here's the dilemma. When interest rates are low, the house prices tends to skyrocket, making it nearly impossible to even qualify for the asking price. It's like the golden ticket to home ownership is just out of reach. But here's where the plot thickens. Paying a slightly higher interest rate now might just be your key to unlocking the door to your dream house. Because the recent trends have shown that many of the rates offered for 5-year variable rates mortgage, as seen here, are now higher than the fixed year fixed rate options. It's a shift that might just seem counterintuitive at first, but it could be a game changer for those navigating the real estate landscape. I mean, like, in simple terms, paying a bit more in interest now might mean a lower house price, increasing your chance of qualifying for that dream home. And once you're in the market, you know where you stand. Imagine paying extra now to save later, like investing in the fancy pressure cooker for all of your future biryanis, right? Because as soon as the interest rates go down, the prices are gonna go. And then you won't even be able to qualify for it. Now, traditionally, the real estate world has whispered the magic number 20%, same as back home in India when it comes to the down payments. But if you're a first-time home buyer in Canada, the government got your back, making the dream home a bit more within the reach with just a 5% of down payment. An income between like 3 to 4 times of your mortgage amount is needed to purchase the average priced home in Canada. And to afford a house, which we see some inventory in the market, you'll be needing approx 180K annually. Okay, let's understand this with an example. If your annual income is approx 180K, you can afford a house of approx 700K with a down payment of 140K, and the loan would be like around 570K approx, or maybe 6, and your monthly payment would come around 4,000 to 4,500. I know it's too much, but just think of it as the cost of luxury vacation. Except instead of beachside cocktail, you get a mortgage statement. Okay, but jokes apart, I have also added a link into the description for you to read more about it. Just give a thought, okay? Now, if you look a little deeper, check out this research. And if you look at the graph, we can see how the affordability is set to improve in the year ahead. Therefore, we need to start preparing ourselves from now. And as we examine the graph from recent research, the trajectory is undeniably positive. Affordability, that elusive factor in many aspects of life, is gearing up for an improvement in the coming year. The important thing is the numbers are pointing in the direction that's favorable for those of us who have been keeping a keen eye on affordability concern. In conclusion, the future is looking brighter in terms of affordability. It's like getting your moves ready for the wedding. The earlier you start, the better you'll look when the music starts. And as we wrap up today's discussion, let's hone in on a critical takeaway from the current economic landscape: the importance of securing a fixed and permanent income. With the job market being unpredictable and news of layoffs echoing every quarter, or less jobs or no job, it's your shield against uncertainty and a cornerstone for successful financial planning. Additionally, the cost of living continues to rise, adding another layer of financial pressure. And for those of you who are considering moving to Canada or giving a thought of settling down with a lot of sacrifices, don't forget to check out my video on the dark sides of Canada. The untold story. Things the people don't say it out loud. You know, sometimes planning to move to a new country can feel like the classic Pata chala yaar. It's always good to get the full picture before making any big move. Catch that video to see what might be lurking behind the maple syrup. And if you found this video valuable, don't forget to give this video a thumbs up, subscribe for more videos, and click on the bell icon. Until then, hasta la vista.